favorite times when we get together and we just get to talk real estate. Like, well, I know we do this probably weekly, and just you have a very unique perspective just because you used to be a financial advisor, you had your own financial practice, you sold it, you came to do real estate full time, and so you just kind of bring another angle that I think a lot of people don't know about, and a lot of people are asking, about our market right now. So it's pretty crazy. And so when I look at the market, just it is hot. It is super super hot, and not everyone knows that it has changed. It went in October, it was hot, to on fire in December.
Yeah, for sure.
I mean, that 2 month gap was crazy. And so a lot of people always ask me, like, well, why is it so hot? And you and I are answering that question all day long. And I heard you answer it again the other day, and I thought it was brilliant. And it's true. And it comes from a real estate and a financial background. So if I were to ask you, why is the market hot? Why is it hot?
Yeah, thanks. It is. It's a question that I feel like we get every day right now. And so if you really break it down, not just Austin's real estate market, but I think you can take any real estate market around the country and look at three main factors, and it'll give you a really good idea of what's going on in the real estate market. Those three factors being looking at the unemployment for the area, what are the job drivers in the area, looking at interest rates, which again, that's not a local level, that's going to be on a national level. And then looking at the inventory, looking at the supply and demand economics of the area, what homes are available for purchase, what's demand look like. And so I think if you break down our market in those three categories, unemployment, interest rates, and inventory, you paint a really good picture of what's going on in our market. So
do we have any employers moving here?
Yeah, let's talk about unemployment for a second, right? So prior to COVID, prior to March of last year, Austin was in a really good spot from an unemployment standpoint. We had hit 2.2% unemployment,
which is virtually like no one, like it's
basically no unemployment. One of the lowest marks we've ever had in Austin's history. Yeah. And COVID changed that, right? We saw Austin's unemployment spike to about 12.5%. But it's fallen every month since then. I think we're at about 5.5%. And if we look at what's happened in 2019 and what happened last year and what's going to continue happening this year with the employers that are announcing that they're moving here, it paints a really good picture of why our employment picture is extremely strong. When we look at that category of our real estate market, it's actually the best in the country. Austin's one of the fastest growing job places in the entire country, the fastest recovering job market from COVID. The Wall Street Journal, for the second year in a row, ranked it the best job market in the entire U.S. I mean, that paints a pretty good picture of what's going on here, right?
Yeah, don't you, because since you get asked this question all the time, don't you keep a list of some of the employers and number of employees that are coming here?
Yeah, so let's take Amazon, for example. They're building distribution centers in Kyle and Round Rock and big building in Pflugerville and other places, San Marcos. I think right now they've hired over 7,000 employers in the area, with more coming. Oracle announced they're moving here and hiring 3,000 employees. Tesla, you've seen their plant on the toll road near 71. They're going to be hiring 5,000 employees. Google is expanding their presence in Austin, and they expect to have over 11,000 employees in the greater Austin area in the next couple of years, which is huge. Apple announced they're hiring 5,000, but they have room for up to like 15,000 employees in the facility they're building. Charles Schwab moved here. They've got 1,500 employees. Samsung announced last week that they're investing another $10 billion into a facility in Austin.
And that's 10 times bigger than Tesla's.
Yeah, Tesla's putting $1 billion in.
Which is huge.
Yeah. And it seems like weekly we're getting announcements of major tech companies, major employers moving to the area. I suspect we'll probably hear in the next couple of weeks of another major employer moving to this area, and it's a huge driver for our real estate market, because I think what we're seeing right now that's driving the market is, as these employers announce, people from around the country are paying attention to where all these employers are going, and they want to invest in our market, right? We're going to see another wave of people moving here for jobs, But while that started a little bit, I think we're still a little ways, a couple years out from all these companies hiring all these employees.
See, that's something you pointed out to me that one of the local economists, Mark Sprague, was talking about everything, and for him to go through and say that, look, all these people coming in now, a lot of homeowners and a lot of investors, but the actual relocation move is going to happen in 2 years.
Yeah.
So you're going to see that blitz, which was just one of those. People don't even realize, like, we're going to see this push, and then we're going to see another push. It sounds like.
Yeah. No, I agree. And so when you, again, just talking about unemployment in Austin and the job opportunities that are present here, that is a major driver for our real estate markets. And it's what makes us feel this is a sustainable shift, right? Sometimes you get nervous when we see this major shift that we've seen in our market. Like, is this a bubble? How sustainable is this? And so we have to evaluate it from these three lenses to see, are there merits behind this growth?
And I had several clients, they always ask me about this because, I do say, we've been on a 12-year uptrend, and that's, that can be scary. People are looking at, do we normally go in 7-year trends? And I was reminded during our last downturn, it slowed, but real estate just, now we didn't go up as fast as we're going up now, but we just simmered down. We were still one of the better real estate markets in the nation. And so, and we'll talk more about affordability and all that and what that looks like later, but.
So let's dive into the second piece of that puzzle, which is interest rates. And again, interest rates aren't just a local issue; it's a national issue. It's an issue that's determined by our Federal Reserve and their policies. And right now, we've got a Federal Reserve that's kept rates extremely low. They continue to buy billions and trillions of dollars of mortgage-backed securities to support the market right now. But as such, they've got a borrowing rate, a federal funds rate of, I think yesterday it was 0.08%, and they're committed to keeping it in a range of 0 to 0.25. And what that means for the home buyer is that when they go to get financing from a lender, the lender is able to get money extremely cheap and able to pass that along to the home buyer. And we're seeing rates in the low 2s, 2.5, under 3 for sure, right? And it's kind of fluctuated this, and it will continue to fluctuate always. But we're talking about people getting 30-year mortgages under 3% right now. Like, that's unheard of, right?
Well, yeah, and one of our lenders even said the other day, it was interesting, it was in late December, I think it reached an all-time low, and the average for a 30-year was 2.3. Then it spiked back up, and he's seen a lot of, and it depends on credit ratios and all that kind of stuff, but yeah, people 2.5, 2.75 all day long, and it's just insane, and it doesn't seem to be changing anytime soon.
No, the Federal Reserve issued a statement yesterday issuing no change and no guidance of any change. In fact, they were even a little more, saying if we see inflation start to tick up, we're not necessarily going to raise our rates. And so that's huge. That's usually what drives interest rates to start going up is inflation. And they were pretty, they're holding off on raising rates. They know what COVID has created and the pandemic has created for a lot of Americans. And so they're pretty committed to keeping rates low. I think we're going to be in a low interest rate environment for the foreseeable future.
And for me, that's more amazing than what people think because, again, they normally do tie it straight to inflation. So the fact that they're willing to say that just because inflation goes up doesn't mean they're automatically going to raise the interest rates. You just said that, but I just want to highlight that because that's huge.
And at some point, if inflation got out of control, they have to. But we're not seeing inflation get out of control. We're seeing home prices increase, at least here, but that's not nationally. And I think that's what's sometimes hard to separate is we get to see what's happening locally and think that we're in the midst of this amazing economy, and it's not the same picture in other parts of the country. And it's part of the reason why we have a lot of dollars coming into the Austin market because it is kind of it's not the only market, but it's one of the hottest markets right now. And so I think buyers are going to continue to benefit from low interest rates. And it's one of the bright spots because as we were going to talk about, there are some challenges for buyers now. There's also some really good things, and interest rates are one of those positive factors for buyers right now.
So then talk about the third factor, inventory. So
Yeah.
how's inventory
Yeah.
here in Central Texas?
So this is probably where it gets difficult for buyers, is because our inventory, and just to define it, because inventory is kind of a industry term that we use. If we were to take the number of homes for sale currently and compare that to the number of buyers that we have in this market looking for those homes, how many months would it take us to sell out of that inventory if nothing else were added to the market? And Rob, you've been doing this for over 15 years. What would you call a balanced market from an inventory standpoint?
Balanced market is normally 5 to 6 months, maybe 4 months of inventory.
Yeah. And when's the last time we were over 4 months of inventory?
10 years ago plus.
Yeah.
I mean, and then the average price points, it hasn't even reached that in a very long time.
Yeah. I remember this time last year we had a conversation because inventory in Round Rock went under 2 months. It was like at 1.7 months, and we're like, oh my gosh, there's 1.7 months of inventory. Round Rock yesterday, when I looked, it wasn't being measured in months. We had 3 days of inventory. We had 0.1 months of inventory. In Hutto, we had 0.2 months. Pflugerville, we had 0.2 months. Georgetown, we had 0.6 months. Leander, we had 0.1 months. Cedar Park has 0. Like, it's tough. There's, and here's the crazy thing: homes are coming on the market. There's stuff to choose from, but there's so much buyer demand right now. It's just getting swallowed up as soon as it comes on the market, and that's why we're seeing multiple offers. That's why we're seeing, and you'll speak to kind of what we're seeing in offers, but homes are still selling every day. A lot of homes are selling every day. We just have more demand in our market than I think we've ever had. Is that safe to say?
Yeah, it's funny because I last year, when you look at all 2020, you'll see that, okay, we had the most volume that we had sold and all that, and people will assume that because prices have gone up. But what actually surprised me is we actually have the most units sold. Mm-hmm. So it's a hot seller's market. We had over 40,000 homes sold in the greater Austin area, which is just huge.
Yeah.
And then the market's got even hotter, and so buyers are buying, homes are still coming on the market, but they're just going.
I agree. That's a huge point. I mean, that represents over an 8% increase from 2019. So, which was our hottest market prior to this, I would think, and we still sold 8% more homes, and the median sales price is ticking up, I think 9 to 10% last year. I think we'll probably see similar numbers this year.
There was one article that said that they think the Austin market's going to go up 25% this year. So just, and no one has a crystal ball, but just,
Crazy. So those are kind of the three factors that I look at when we evaluate real estate markets. What's going on with unemployment? What are interest rates doing? And what is the inventory? What does the supply and demand look like in the market? And looking at those three factors, it makes a strong case for why we're seeing prices increase, why we're seeing the Austin real estate market so hot. And I think it also speaks to why we expect it to continue. I mean, I think we're going to have to see one or two of those things take a drastic shift for us to see a downturn in our market. And I don't think we're going to see employers stop moving here or hiring anytime soon. Interest rates, I think, are going to stay steady for a while. And it's going to take us years to catch up on the inventory. I mean, we know we have builders that want to build, but we have to find the labor and we need to find the land. I mean, there's a lot of factors that are going to have to take place for our inventory numbers to work themselves out. So I think we're going to see ourselves in this market for a while.
I agree.
And I wanted to ask you, because over this last month, you've looked at over 100 different offers. And as we said, people are getting under contract, but what are you seeing now that's maybe different from what we saw a year ago in the offers that you're getting? What's standing out to you as a good offer right now?
Well, as a listing specialist, as I kind of go in, again, seen over 100 offers this year. It's been crazy. That's my word for this year in a good way, but we're seeing a lot of different things. I did do a video on how to win in multiple offers. You should watch it. No, but just really hitting on some things. So again, knowing the market went from hot to on fire. It's going to depend on neighborhood, because this neighborhood over here, when I look at comps and I go on a listing appointment, this is where it's fun. I went on 5 listing appointments in a row where they were all $100,000 short on what they thought their home would sell for. And normally, like in a normal market, sellers might think their home is worth more than what the market would bear. So I kind of go in and I have this energy, and I'm like, I just, most people don't know. Like, tell me what you think it'll sell for, and I have all the numbers here, and I'll look at the numbers and I'll say, here's all the past comps, and we can't look at any of these.
Yeah.
Here's what I know is pending in the area, and here are the prices, the number of offers, and what came in, and this is what we should go at or above. And it does matter where you list. It does matter how someone negotiates for you to make sure that you can net the most amount of money, because it does make a difference, especially in this kind of market. So what we're seeing in the multiple offers right now is incredible. So obviously highest price in this neighborhood over here. Maybe a little bit further out, you might be getting somewhere between list price and $10,000-$20,000 over list price. We saw one the other day that was over in this area. It was a very hot area, and they got 92 offers and $171,000 over list price. And sometimes, and it also, when you say over list price,
171,000 over list price.
171 over list price. And it also depends on who's listing it, because sometimes those numbers seem more, and I don't say that in a negative way, just some, and that wasn't the case here, but sometimes an agent will come in and they may not know the area, and they might list it with yesterday's numbers. Yesterday's numbers don't matter anymore. Like, it used to be, I go on a listing appointment, here's what's sold in the last 6 months. I'll bring that, but I won't even look at that now. I'll say maybe last 30 days, but I really will look at pendings, because when there is 3 days of inventory on the market, you gotta go. So real quick, how to win in multiple offers, knowing that, obviously price is gonna be huge. People now are looking at, they did a new form for all this, but the right to terminate because of an appraisal. The realtor language is appraiser waivers, right?
You love that term, right?
Yes. But on the listing side, what that means is, we're going to give you this much for the house. If it only appraises for this, the buyer won't terminate because of this, and they're going to cover the difference. That's huge for sellers. And so if people are not buying cash, then they're willing to do that. Cash, most of the time, they can do appraisals, but a lot of time they don't.
Right, still negotiable, but we're not seeing the seller needing to negotiate that, right? I mean, because when you're looking at 20 plus offers next, right?
Yeah, and what it will be, which is funny, you would think someone would be someone says, okay, I'll go 20K over list price, and you would think they would be the ones with the appraisal waiver. What we're seeing is, on like one of the homes we listed, 30 offers, 80% of them had the appraisal waivers in there, full appraisal waiver, the right to terminate. 15% probably had the partial appraisal waiver, and then the rest of them didn't have anything. But the ones who go aggressively way over, they're just saying, forget it. We'll waive everything. And so it's that getting creative. By the way, though, we got a lot of secret weapons in our back pocket that people don't realize that our buyers utilize. That people don't know how to utilize that with their lender. And so without kind of getting into everything, but there are ways to utilize that and not have to bring the full difference to the table. And so we coach our buyers through that as well. And I can tell when an offer comes in from a lender that knows how to do this, and that they're willing to say, I'll cover this difference, but they're going to do it in a different way. It just, to me, means they're more committed.
Yeah, and we're actually going to get to talk with one of those lenders, I think in a week or two, and interview him on how they're helping buyers do that, and it's huge.
Yes.
Because that is a pretty major issue right now, is for a buyer, how do I overcome appraisals? So
the other thing that you're seeing is sellers are asking for a lease back, meaning that they sell the property today and close on it today. They give me a 30-day free lease back or something like that. That is making a big difference, and people are coming in very aggressive there. And then also some of the little fees, right? I say little, but Buyers might come in and say, hey, I'll pay for title, or I won't ask for a home warranty, or let me pay for my own home warranty, and get all those things in there and their risk. I like to know who's committed. So in the sense of, it's different someone coming in giving a $400 option fee versus a $1,000 or $2,000 option fee.
Yeah.
And so on the seller side, again, you make a lot different recommendation than you would on the buyer side. But then when you're on the buyer side, what I hear you do all the time is just like, what's their motivation? Like, if your motivation is this, here's how you should move forward. If your motivation is this, I would move forward this way. And then we let our clients make the decision, and I think that's the way to best represent them.
Agreed.
The other thing, and I'm sorry if I get too excited about this, but some of the other secret weapons that we'll kind of do, so not only knowing how to come up with a difference on the appraisal shortage without just having to come up with the full difference, because there are solutions, we have ways to turn our finance buyers into cash buyers. We have ways to help our sellers buy a home cash before they sell, and both of those still get a normal loan on the back end. And so in this kind of market, between having those secret weapons and having the secret weapon to say, you want to live on this street, we'll door knock, we'll call, we'll do whatever, you have to be aggressive on the listing side, you have to be aggressive on the buyer side, and we're working harder and going after it, but we love it. And so you have to be like, you got to go. And that's why I think our team is able to still thrive in the midst of this.
I agree, and that's one thing I love about my job as a buyer's agent is the job role seems to change monthly right now as far as what we're focusing on. And right now it's finding inventory, whether that's off-market properties or coming soons, or we're door knocking, or we're calling our sphere asking if they know anybody. It's, those are all things that have been a part of our job, but it's a greater focus of our job now. But it's great. And being able to, like you mentioned, have tools, have different solutions, be able to be a problem solver. Hey, this is a problem. Okay, let's go find somebody that can make us a cash buyer. I love it. It seems like, again, weekly, we're coming up with new strategies, new tools to be able to serve buyers in this market. And it's fun. We're seeing it work. We're seeing buyers in this market that's tough. We're seeing buyers go under contract. We're seeing buyers get homes. And so it's exciting.
Yeah, if they're resilient and can kind of go through it, it's huge. And you pointed out a couple of things which I thought was awesome. We've had some out-of-town buyers come in, and locals are we're sticker shocked right now. We're looking at this and going, oh my goodness, the prices are increasing this fast. I've gone on listing appointments a month ago, and people are like, yeah, we'll list, we're ready, Robert, but we'll tell you, when we're ready to go. And I'll call them up and say, hey, whenever you're ready is good, but just so you know, the pricing I told you a month ago is completely off now, and we were going to go higher. And knowing that, this is the thing that was very interesting to me. So we were now the 10th largest city in the nation, and when you pulled these numbers, which were very exciting to me, but it shows that as the 10th largest city, we still have one of the lowest real estate markets. And when you compare us to the other 9, it's a big difference, right? I mean,
it's still pretty big. I mean, if we look at the greater Austin area, we still have a median home price in the mid 340s, 350 maybe. And if we compare that to some of the other cities in the top 10, like Los Angeles is 715 median home price. San Diego is 690 median home price. San Francisco is 1.3 million as a median home price. New York is 700,000 as a median home price. So when we have all these buyers that are looking at Austin from out of state, this is not expensive to them. They live inexpensive. This is still relatively inexpensive. And as I told you the other day, I had a buyer tell me, look, I missed out on what happened in Silicon Valley. I'm not missing out on Silicon Hills, which is not a new nickname for Austin, but we're hearing it a lot more often. And with every new tech company that moves in, it kind of solidifies that Silicon Hills nickname, I guess you could say. But I thought that was interesting. He's like, I'm not missing it this time. And he's not alone. I think that's the attitude of a lot of investors, especially from California, because they grew up in it. They saw it. They saw what happened to real estate. And if they didn't buy at that time, real estate became very expensive over the next 20 years. And so that's what we're seeing right now. Those are the conversations, and when you hear, hey, we've got people from out of state buying in Austin right now, which we absolutely do, I think that's why. I mean, they don't want to miss out on what they, from a distance, can see happening.
Yeah, I've seen several say that they're hedging their bets, so they know regardless. Like, and this is their words. Like, real estate's a great investment. You know, I'm also buying it now as a stock, which is very interesting to me in the sense of, I think today I'm buying it. I see the values are going up, and I see that there's a run. I'm gonna still buy it at this high price. I assume it's gonna go up to here. And oh, by the way, even if it doesn't, like if I'm renting it out or doing whatever, like I have this solid asset, and I'm betting on tomorrow's value,
Right.
which as locals, we don't hear that a lot. But as people coming in, they're like, I'm not missing this opportunity. Here's what we're doing, and none of us have a crystal ball, but
Yeah.
just to see their confidence and no, of course, why wouldn't I go to this price?
Yeah, it's to that point, it's a physical asset, right? It's not a piece of paper saying I own shares in this company. You're buying a physical asset that's going to have value, some value, right? That value fluctuates and changes, and people are betting that that value is going to go up. But even if it didn't, you still own that physical asset that's hard to replace, or has significant cost to replace. So I love it as an investment. I think it's a smart investment, and I think we're going to continue to see a lot of people invest in our Austin market going forward.
I totally agree. My final thoughts on everything as I kind of look at this is just that I like to talk to everybody, you know, in our market. So if I'm talking to everybody, it would be the out-of-towners, the locals on the list side, the locals on the buy side. So the out-of-towners, I feel like they know what's going on even more than the locals, which is very interesting as they see the hype and everyone sees the national news how Austin is like the best place to be for real estate. And so that's why we're seeing a blitz of people, especially at our average price points you were mentioning, because they do want to get in on this and not miss it, especially if they think like we're half the price of what some of these other markets are. So that's for out of towners. For the locals on the listing side, your home is worth more than what you think. I can't tell that enough to people. And being able to negotiate and bring the most, like it does matter how that works. It's not just if you're selling it. We had one that they wanted to sell, someone approached them in the neighborhood, they want to sell it direct, and they thought they were getting a great price because they didn't know what they were doing or what the market was looking at. And so we went in and said, well, let's just look at this. You know, what if we can get others to compete for it? And they sure did net another $70,000 just by opening it up and letting us help them and kind of go through it. It's not like, oh, you're saving $10,000 or $15,000. Like they would have left $70K on the table just because of that. And so I'm very passionate about like making sure the consumers know everything that's going on, making sure they're represented, and then the same thing on the buy side. Like if you're in it for the long run and like you're gonna get your home, you can get a home, and you just need someone that's willing to go after it for you. You need a team that's willing to go after it for you. And I don't say that just for us. I mean, I believe in us, of course, but there are a lot of good realtors out there, and they need to act. They need to be able to go right away, and you will eventually get a home. So don't give up. But as like our team, I think we have some unique tools in our tool belt that we can really help get our buyers over the hump, which is why more of our buyers are buying. I mean, we're getting them under contract, you know, multiple a week, and that's what we love to do. And so this is where people get to thrive. And so again, our market I feel is changing by the day. So the next time we do this, and I know we do this weekly, but we'll go through this again and we'll reanalyze everything that's going on. But I love our market. I love going after it, and we are in very unique times, and so it'll be fun.
Enjoyed it, man.
Yeah, me too.